Well, things are kind of moving and shaking in the grain markets today, and let's take a look. Let's go to the corn first. And corn, about mid-session, started turning higher on the coattails of the move in the soybeans, and that's a whole different story. March corn is now 3 1/4 higher at 607. So it turned higher, went up about 3 or 4 cents, and then fell back, and now it's making a second run again after that midday point of that price turn. December, now 1 3/4 higher. We're at 5.56 per bushel. Most of the action, though, seemed to derive from the soybean trade. Now you have the March contract at 14.12, believe it or not, after a low of 13.76 today. What a range that is. We are now 24 cents higher on the day and just holding very strong so far. Even the wheat turned around in Chicago. We had been lower. Look at March now. We're 10.5 higher at 7.56.5. Well, my goodness, that's 21 cents off of our earlier low of the day. In the Kansas City market here, hard red wheat, March up a nickel now at 7.73.5. And that looked kind of poor in the early stages of today's trade, but it has turned around too. The nearby contract is showing the most strength here in the Kansas City market. Spring wheat trade, March, still kind of lagging. It's dragging its feet. We're down 3 3/4 at 9.20 per bushel. Well, I want to bring in Todd Bubba Horowitz of BubbaTrading.com in Chicago and sort it all out. All kinds of stuff going on today to wrap up the week, and it's been a tumultuous week in the grains. Todd, what do you make of it?
Good morning, Ron. Well, it has been a wild week, but I mean, we've had a bias to the upside, and that continues today. And, you know, the wilder and wackier the equity markets get, the more likely we will see money flow into the grain markets, because that money's going to want to go somewhere. And the equity markets have been under some pretty heavy pressure this week, although the Dow's higher today, but everything else is lower. So I think you're going to see continued higher prices, plus the fact that we do need higher prices to overcome the higher input costs. So there's a lot of reasons why, but certainly the demand is, you got some weather in Brazil, so everything is favoring higher prices in the grain markets.
You think this is kind of the start of a longer-term move now in the grains?
I think so. I mean, again, listen, anything can change at any time, but right now they are trending up beautifully and making another run to those highs they put in over the summer, and certainly we could take them out. And if the equities do continue to sell off, that money's going to be looking for a home, and it's still not going to the bond market, so I would suspect much of it will come into the grain markets.
Well, that battle for acres is going to be continuing for quite a while. And boy, that has been quite a move in the soybeans since early December or the end of November there. Well, I'll tell you what, Todd, we'll pause right here for a quick little break, and then we'll come back in a moment and we'll talk about maybe that jobs report that came out this morning and if it means anything to our livestock trade. We'll have that next. We're talking with Todd Bubba Horowitz of BubbaTrading.com. He's based in Chicago. I believe he's in Las Vegas today. But Todd, talk to me about that jobs data that came out this morning. A lot of talk about that. It kind of pressured the Dow early on today, but it seems like it has come back a little bit. But overall, does that have much to do with perhaps our meat markets, for example?
Well, it may. As we know, the meats tend to follow equities because obviously higher equity prices usually mean more prosperity. Today's jobs report was a disaster. And I think the only reason you're seeing an attempt to see these markets rally in the Dow anyways is the fact that they're hoping that the Fed decides to slow down the pace in which they're going to raise rates, which they're not. And the bond markets are telling us that the rates are going higher. I mean, the 10-year is now at almost 1.8, Marlin. A year ago, it was at 0.25. So we're seeing very much higher rates, but I don't think it's going to put too much pressure yet on the cattle and hogs. I don't think we see pressure there unless the economy really starts to fail, which is a possibility. And we are at nice lofty prices, but still trending higher and could go significantly higher if things work out properly.
I thought it was interesting. The dollar value right now, we're down 506 points on that March futures contract. This is on the U.S. dollar index. We're at 95.820. Sometimes if it gets below 96, that can be somewhat supportive here to the ag trade. Haven't seen too much in the way of any cash cattle market movement here early this morning. And the futures market kind of quiet, although the wholesale trade really picked up. You have February live cattle quoted 20 lower now at 137.15. April down 55 cents at 141.90. You have to admit that the weekly export sales activity on the beef last week Todd, that was pretty dismal. They can surely do better here in the week ahead, can't they?
Yeah, of course they can. But again, remember, Marlon, we've got issues worldwide. We've got economic issues worldwide, and usually the slowdowns start in some of the export partners because again, they're not as in good a shape as we are. And again, you're looking at potentially things that could be very ugly because when the rates start going up and the loan calls start coming in, it becomes a much different economy and a much different environment. So it could create some pressure.
Okay, now to the feeder cattle, and while the live cattle are just slightly lower on the feeders, we're actually down $1 on the March contract. We're at 166.27. Obviously, that corn turning higher is not helping the cause for the feeders here. The deferred contract's 50 to 60 lower. Now, if you look at the lean hogs, this is interesting in itself. You have the February almost $3 lower, Todd. We're down $2.97. It's $79.97. So we have ducked down below $80 now. How significant is that? While you have the summer months just under $100.
Well, I think that we'll see how it plays out. I think a lot will tie together here between the cattle and the hogs because I think the hogs will be in demand. I think that they're still in a pretty solid uptrend. We've had a couple of big up days back to back, and so there's a little bit of a pullback here, although it sounds like a big number. It's only in February, and the losses as we go out in the curve get much smaller. So to me, they all look pretty good. I wouldn't be afraid to be a buyer here. In fact, I'd probably look to be a buyer on any of these dips here until the trends change and until we see some reverse action. But for now, I think they look pretty good.
And there it is, down $3 on the February lean hogs at $79.97. Well, it was $3 lower just a moment ago. Todd, thanks for helping to explain the markets here today as we head toward the weekend. Always good to visit with you. Thank you, sir. Todd Bubba Horwitz at BubbaTrading.com, located in Chicago, but today in Vegas. Janet, back to you.